Hi, I'm Steve Becker. I'm National VP for Individual Disability Income Sales at Principal Financial Group. I want to first thank NAILBA for this opportunity. We appreciate the partnership that Principal has had over the last several years with NAILBA, and we really greatly appreciate the good work that NAILBA does as a voice for this most important industry. I want to thank those who are tuning in, those that are committing to learning a little bit about the DI business, where it's at today, and how you can incorporate IDI and income protection solutions into your businesses. And finally, thanks to the panelists that we've set up for today's call. Principal is very pleased to have three VIPs in the IDI distribution world as a part of this panel discussion. And I'm going to ask them to each introduce themselves in just a minute here. A little bit about Principal and the IDI business. We're considered a leading player. We're the second largest provider of non-can DI in the country. We sell about $60 million of new annual premium per year. That's been growing nicely over the last couple of decades. And we have over $500 million of in-force IDI premium, which means that we're insuring somewhere around 200,000 individuals and small business owners in this country. We've been at it for a long time. We continue to be at it for a long time. We're continuing to invest for future growth that hopefully will be above industry average growth over the coming decade and beyond. So at this point, I'd like to introduce the panelists, actually have them introduce themselves. First up would be Eric Griffin from the Cason Group. Eric?
Yeah, thanks, Steve. I don't know that I've ever been introduced as a VIP before, so that's new ground for me. But no, thanks a ton for having me. You guys have been a big part of our growth and success in the DI business, which I'll talk a little bit more about later. But I work for a firm called the Cason Group. My wife and I live in Charlotte, North Carolina. Our company is headquartered in Columbia, South Carolina. We've got offices throughout the Southeast. Just real quickly, our background is in the employee benefits brokerage. That's still about 70% of our business, and that's the core medical, dental, short, long-term disability. We've got an enrollments firm. And then about 8 years ago, we launched our DI business. We also have a big life brokerage business. So the life and DI business make up about the other 30%. We currently have about 140 employees, which includes about 22 external wholesalers. And I'm really grateful to be part of the panel. So thanks for including me.
Great, thank you. Marcy?
Good morning, and again, I appreciate the opportunity to work with the panelists today and share our stories with NAILBA. And my background is with 10 years with Paul Revere on the East Coast, and then I moved to the West Coast with Mass Mutual to Scottsdale, Arizona. And the last 14 years, I've been with Disability Insurance Services, which is a national brokerage disability wholesaler. And we work across the US, and we have the field force in key areas across the country, and our corporate headquarters are in San Diego. So for the sale and service of individual disability, as well as guarantee issue, we don't do the group products on the LTD side, but enhancements and supplements to group products. And we've been doing that for 23 years now.
Great, great. Courtney Wilson.
Hi, I echo the other VIPs' appreciation for allowing me to participate today. My name is Courtney Wilson. My firm is Fortify Insurance Group. We are based in Westport, Connecticut. We're an independent brokerage general agency that is specializing in more general protection solutions, but using disability, long-term care, life insurance, and employee benefits a bit, comprehensive. And that we've always considered ourselves experts in the DI space. Our business has really evolved over the years to include more of those general protection products, specifically as it relates to coordinating with financial planning for individuals and businesses. We continue to focus on the living benefits, specifically like DI and LTC, because it's created a good differentiation for us in the brokerage market. And we find that most primarily focus on life insurance sales. So having that kind of living benefits focus has been a great advantage for us in the market. Fortify operates in all 50 states, and we also have been known to support situations that have an international component. But thanks again for having me.
Thank you, Courtney. Let me start the questions. I'm going to direct this first one at Courtney and Marcy. I've got a little different twist on the question for Eric, and we'll ask Courtney to go first. With the type of work that you do, most firms are pretty focused in the life insurance arena. You've chosen, however, to have a DI be a predominant part of your business. Can you talk a little bit about how you came to that decision to focus on DI?
Absolutely. Sure. I was fortunate to have been introduced to the DI market before I learned about any other insurance lines. And I immediately recognized the advantage of having that expertise and understanding not only the contractual piece, but more importantly, the underwriting nuances of disability insurance. It opened up a lot of doors for me over the years because there are so few that specialize in disability like we do. Everybody was talking life insurance products. So being a guy that was calling about disability insurance opened up a lot of doors with some high profile advisors over the years. Our advisor base has always been very broad. We work with a lot of career advisors, independent financial planners, life BGAs, IMOs that recognize the need for living benefits, but they just require someone with the level of expertise to support those efforts. Underwriting and mortality versus morbidity, as we would all agree, is very different. Because of this expertise that we've developed, we've been able to work with many high-profile athletes, entertainers, physicians, various entrepreneurs of all shapes and sizes, and much more. And we've become a resource for what I like to call the I've got a guy protection situation. Another thing that I love about the DI space is that there are very few situations where we don't have an option for a client. So even if they're medically substandard or have a high-risk occupation, the industry is built to provide coverage if they have an income and they need to make sure that it's covered. So we've got this traditional market, there's a secondary market, and then we even have a surplus market that includes like the Lloyd's of London type of approach for international unique risk situations. If you look at the life insurance space, in contrast, there's a threshold where traditional carriers can't offer if a rating is too high, and there's really no secondary market like there is in the disability. So the next step is guaranteed issue life insurance, which is basically small amounts of whole life that cover final expenses. Lastly, from a revenue perspective, there is nothing like the renewal income that disability insurance offers. It's so rewarding when we have a producer that does a handful of DI cases and sees their second year renewals double from 5 to 10%. Or, more just like having the conversations about protecting income and business interest against risk of injury or sickness. Even better when we have the ability to do a year-end bonus check to an advisor who's made DI a part of their practice for a couple of years, and those checks just get bigger and bigger each year. The income potential is tremendous. So,
excellent. Thank you, Courtney. Marcy, same question.
Okay, well, and very well said. I obviously agree with everything Courtney's had to say. I got into the DI business at very long time ago, and we were just a single focus on disability. And with the need for disability, which is the single largest need that somebody has, it's, we look at the pyramid, for example, income covers your food, your clothing, your house, also all the other lines of coverage you buy. So without an income, it's impossible to maintain your lifestyle. And most people don't recognize that. They don't think disability will happen to them. And that's also why we like to call it income protection. We're protecting your paycheck. And it has been very rewarding, according to LUTC and other studies. Persistency and the renewal trails are second to none. And you truly are vested. You don't have somebody that comes along to do a broker record letter and replace your coverage. So to purchase an income protection product early on in your career, it carries with you, throughout your entire working career. I've had a policy for almost 30 years. And, you know, the premiums never go up, and it's just such a great foundation for everything, every other thing you do in your life or buy or need or you need to protect. So it's been a great career, and I don't know what I did in my first life, but I have been in the DI world. So here I am.
Great. Thank you for sharing, Marcy. Eric, your firm's a little different. In your introduction, you talked about Cason Group being very, and I'll use the words, very successful group benefits distributor, and recently made the decision to move into personal solutions like IDI. Can you talk a little bit about how that decision came about and the calculus that went into that?
Yeah, you bet. So I guess this spring we will celebrate being in business for 30 years. And when we got started, it was straight employee benefits brokerage. I've been with the company for a little over 20 and actually started out on that side myself. And I think for a long time, we saw opportunity in the disability business. And yet we're a pretty focused organization. When we dive into something, we want to be good at it. And so we didn't think for a long time we could be very good at disability, so we would refer that out. There's a lot of good firms out there that do that still. I wish I could say there was a big calculus to us getting into it, but it really is two pretty simple reasons. Number one, just like the life brokerage business, we got into that business because our benefit producers were asking if we could do life brokerage also. They wanted to have a one-stop shop. We started that business about 15 years ago, and as we did that, our life advisors were asking us if we would also do disability insurance. And so it was really this organic approach that we had. And then the second reason, I can say this on a call with you, Steve, principal is a big part of that. Our advisors were asking us to get into it. And the wholesaler out of Atlanta, Georgia, Don Chimay, who's gotten to be a really good friend and is a great partner of ours, he was telling us we should be doing it. So I think it was a perfect mixture of us seeing some opportunity because of the benefit side, Don telling us to do it, and advisors asking for it. So it wasn't this grand plan to make a big splash into the DI business. I will tell you, though, that over the last 8 years since we've been doing it, while it may not have been this overly scientific reason for getting into it, it's very much a big part of our plans now and moving forward. For all the reasons that Marcy and Courtney mentioned, it's a great business to be in. There's tons of opportunity, which we'll talk more about. And it just happened to come out of our benefits business. So I think we've approached it from a little bit of a different angle and tried to capture some market that maybe didn't exist.
Excellent. Excellent. Thank you for that, Eric. Sounds like a lot of pull and maybe just a little bit of push.
You got it.
We appreciate what you do, and same with Courtney and Marcy. Very important growth businesses for the principal. Okay, the next question. Let's talk a little bit about state of the union in the IDI business. You know, what's going on? How is it different from the way that it's been in the recent past? And we'll go in this order: Marcy, Courtney, Eric this time. Marcy?
Okay. Well, I think we have some learnings from COVID, and our market has been successful in spite of it. The agents that are working are doing very good because our wastage is down. I think the consumers are serious and they're recognizing the need, especially seeing, sadly, ill friends and family. So it's, you know, finally, it's such an undersold product, and the consumer realizes the need. Doctors always have. You're going to be sick or hurt, you know, and that's what they do for a living. Doctors are huge purchasers. The landscape has shifted. The carriers and the distributors, they're somewhat impaired to some degree. They principal as well, making many concessions for underwriting concessions, and the need for the electronic tools for applications have really become more necessary, and carriers have stepped up. As a GA, we instruct and support and provide resources for the broker as their reach is somewhat inhibited to the face-to-face approach that they've, you know, previously done. So in this changing market, how to overcome somewhat of an invisible wall that's been erected. So for the keys to success and prospecting and sales. So it's definitely a different state of the union than it has been in the past, but it's really, I think it's helped. The carriers have really stepped up. The agents are, we're getting good applications, and these people want to get the protection, not, you know, just like the push and pull, you know, don't think it's going to happen to them. And now we're seeing, wow, it really can.
Great. Thank you. Thank you, Marcy. Courtney, what's your perspective?
I think the DI market is one of the healthiest and strongest lines of insurance, but like Marcy said, continues to be very underappreciated business. You know, the industry was trying to get out from under years of overinsuring, lifetime benefit contracts, no limitations on mental nervous claims. And, you know, it was kind of, you know, some would call it like the greedy 80s, you know, kind of a thing. But the benefit limits when I got into the business were exceptionally low back in, you know, 99 and 2000. But over the course of my career, things just got better and better each year. New companies entering the industry, carriers increasing their issue and participation limits. But I still feel that DI has just continued to be underappreciated over the time, even with all of those changes, you know, because it has no cash value, has no return of premium, dividend payments are very limited, you know, making the insurance purely an expense, covering something that we never want to have happen to us, you know, a disabling injury or sickness. You know, as I mentioned, the DI market has seemingly gotten healthier and healthier over the course of my career. And I think that that is showing in a lot of what Marcy said in the advent of accelerated or simplified underwriting programs, more guaranteed standard issue opportunities available for small and mid-sized businesses, which wasn't available 10 years ago. We've seen several carriers really focus exclusively on integrating that individual disability insurance into employee and executive benefit spaces, where historically employers would simply use that group LTD, STD, provide some basic income replacement for their employees. But as I'm sure Eric will get into more detail about, you know, carriers are working to do more education inside of that space and in educating employers, educating employees about using individual disability insurance as a supplement to make sure that we're maximizing that income replacement for employees and executives. And for the carriers, you know, this approach really provides a spread of risk over a large population versus simply underwriting individuals. You know, and again, as Marcy said, doctors are the biggest consumers of these products. So when we're saddled with, you know, one particular type of individual that dominates that market, you know, it has its downside. So I think that advent of making it more available and accessible to, you know, regular, everyday small business owners, mid-sized business owners, and corporate employees to make sure that they have the right type of insurance. But again, it's, you know, for those consumers, the ability to have that portability and be able to get it easily, I think, is the important advent that we've really been getting into over the past several years.
Great. I'll turn to you, Eric.
Yeah, you know, I remember when we got into the business, we would have a lot of advisors talk to us about the heyday of disability back in the 80s and then how it took a downward spiral. And so I guess my State of the Union comments would really just be on my perspective of the last 7 to 8 years. It seems like, and I'm guessing the folks on the panel would agree with me also, in the 8 years that we've been doing disability insurance on a case-by-case basis, we almost never run into competition from advisors or other BGAs, which I think highlights how much opportunity there is, because I think it's probably the most underserved market that we're in. And I think there's a couple of reasons for that. I think some folks are still thinking back to the days of it being so complicated to underwrite, the process, getting hung up on definitions. And as Marcy pointed out, the industry's done a really good job of trying to make that application process a lot more streamlined. But my experience has been that the competition really is twofold. It's from overwhelmed advisors. And I'm starting with the benefit advisors who have group medical insurance, which is the bulk of the premium that an employer spends. Then you've got the other core ancillary benefits of disability, dental, the voluntary and worksite 401k plans. So just you've got an overwhelmed benefit advisor who doesn't really have capacity or take the time to do the math when you've got an executive making $500,000 a year and they've got a 60% to $5,000 a month long-term disability plan. That's great for the first $100,000 of income, but you've got $400,000 of income that's exposed. And I think when you've got that many things on your plate as an advisor, it's hard to zoom in at the individual level. So then you've also got financial advisors who are overwhelmed with investment advisory, with tax planning, estate planning, financial planning, college planning. And so when it gets to the protection components, it's just a different conversation. So I think BGAs are having to get way more involved now, maybe than they ever have, to include being part of the point of sale. I think the second part of competition that we see regularly, and I'm guessing you all would agree with this, is clients just, they don't think they're going to be disabled and they don't spend the money on it. And so I think a big part of what's going on in the industry right now is education, because I think ultimately that's the only thing that closes that gap. But in terms of the opportunity, it's huge. In terms of the carrier support, it's there. I think it's just up to us as the BGAs and advisors to go try to capture it.
Great, thank you, Eric. All good insights. Next question. What advice would each of you give to the audience on how to develop their income protection or BI business? And this time we'll start with Courtney.
Thanks. It's a great question. I mean, and I think that the most common thing that I see is the tendency to overcomplicate the concept of disability insurance. So I really subscribe to trying to keep it as simple as possible. In the markets that we serve, we're seeing a real evolution of financial planning with fiduciary and suitability reporting requirements. So I think what this does is it creates this need for the idea to create conversations about protection of financial plans. And I really like to look at it as the proverbial three-legged stool, which I'm sure most of you are familiar with. But the way I think about it is we don't want to outlive our money, we don't want to die prematurely, and we don't want to become hurt and sick along the way. For most of my clients, my financial advising clients, the running out of money is the focus of their practice, making sure that retirement contributions are made early and often. And that leg associated with premature death is easy to incorporate into that plan with options like term life, whole life, GUL, IUL, and variable ULs that are now pushing lifetime guarantees on the death benefits, surrender and cash value opportunities, even long-term care riders that make the life insurance more of a Swiss Army knife of protection in many respects. But to my knowledge, there's no life insurance policy that includes any sort of disability income replacement rider. So it really requires that separate conversation. So the leg of the stool, fits right in line. That life insurance, that failure to survive, a leg fits right in line with what the most financial planners are focused on in that accumulation of retirement assets. And kind of like what Eric alluded to, no one can argue the death that is inevitable. And, we don't really need to talk about it. So coordinating that accumulation conversation with life insurance is very easy. That last leg that supports the living benefits is the one that gets the least amount of attention. And that includes the idea of disability insurance for income protection as well as long-term care for protection of accumulated assets. Ultimately making sure that we don't run out of money along the way, right? So I believe it's this simple analogy that helps a client to better understand the high-level concepts of protecting their plan using disability, life, and long-term care. I feel this conversation becomes more and more important in this age of fiduciary responsibility. For most to do all of these things at once is cost prohibitive. And, but I think that the client needs to be afforded the opportunity to understand what's available, know what's essential to a healthy financial plan, and give them the opportunity to make that decision for themselves of where they want to put their money and what's the right protection for them.
Great, thank you, Courtney. Eric, next.
Yeah, I guess if the question is advice to the audience on developing our income business, I'm a pretty simple-minded guy and I like a three-step plan. So I was just trying to think of three things to share. And I think the first one, as a BGA, it's not lost on me that we're at the National Association of Independent Life Brokerage Agencies conference. So I think if I'm a BGA, I would start by making sure my own disability income plan is in place. I don't think you're going to effectively push or market something that you haven't really invested the time to research for yourself. So that'd be my first step. I would encourage you just to review your own coverage. I think the second thing is, as we're all serving advisors, is start a campaign to make sure your advisors have the same plan in place. So start with yourself, make sure then the advisors have their coverage in place, because they're not likely to promote it either if they've also not bought it themselves. And so I think once those two things are in place, I think the third thing that I would focus on, we're in the life brokerage business like a lot of you guys are, and we all do a lot of life insurance policy reviews. So I think the simplest way to get started in this business, since the competition oftentimes is from advisors and clients saying, nope, got coverage through work, don't need it. I think the simplest place to start is just to offer to do long-term disability contract reviews and point out the need. Because if there's not a need or a perceived need in place, somebody's likely not to invest in a policy. So that's my three-step plan. I think the other thing, and Courtney alluded to this, we see this or get this question a lot of times with the long-term care business, where somebody will say, what's the best policy? And my answer oftentimes is, if you can tell me when you're going to go out, how long you're going to be out, what you're going to be out for, where you're going to receive coverage, and who's going to provide it, I can tell you the absolute best policy. I don't have the ability to do that on the front end of a long-term disability or long-term care case. So my point is don't let perfect be the enemy of good. Of course, contract language matters, and it matters when you go on claim. But it doesn't matter at all if you don't have a policy to cover when you go out on claim. So get coverage in place and then start dialing in and learning the contract language.
Great advice. Thank you. Thank you, Eric. Marcy.
Yes, everything that has been said, absolutely, I agree. Keep it simple. Just talk about the basics. They don't need to know. Contract language is important, but not to just all get technical jargon with it. If you're sick or hurt and cannot earn a paycheck, where will your income come from? And I mean, that's it. Where's the income going to come from? And the fact that we can provide income protection to fit any budget with a variety of riders and features and benefits that are available to match your budget, whether you have underlying group LTD at work or you need to, or it's a standalone policy. For agents that are not real comfortable with that cross-selling approach, we as well as others, I'm sure, have concierge programs available that we can assist you with it. But also to work your existing book, cross-sell your life clients. If you think of your favorite client, if they left the work today and had a car accident and they became disabled, did not die, and they call you, hey, what do you have in my policy? What did you sell me so I can take care of my family? Oh, well, we have the waiver of premium, so you don't have to pay your life premium while you're disabled. But what about my paycheck? What about the money? So take it a step further when the life agent is selling life insurance, and that's a great segue from the disability waiver on the life policy to talk about the need for that income to come in to maintain your lifestyle. So cross-selling your book of business is the easiest way to do it. Pick the low-hanging fruit and just go talk to age 30 to 55 to talk to them about income protection. And also, if you do have a book of business already in DI, make sure you're exercising your purchase riders. That's a gold mine of business to just exercise each year without any additional medical evidence to buy additional coverage. And we're doing a lot of that now. People are calling in, when can I exercise more coverage? Because again, the State of the Union is warranting people really taking a look at their finances. So.
Okay, great. Thank you. Thank you. I'm gonna go to the last question here, which is, we've focused a lot on the individual marketplace, but a good number of NAILBA members and their brokers are focused on the small and medium business market. For this group, what are your suggestions on how they should and the ways they might incorporate BI solutions into the work that they do in the small and medium business market? Marcy, I'll come right back to you.
Okay. Well, you really should be talking. I mean, it's an obligation to address income protection. And why we are in the food chain behind dental and pet insurance and prepaid legal and some of these other things is still a mystery to me for 30 years. But they just don't think it'll happen to them. They don't think they're going to become disabled. But numerous points out also, if the more products, your retention's 30%-ish, a couple products 50-something, and as high as 80% retention if you're selling 3 or more products. Someone's calling on your client to do that. So while you're there to cross-sell, we talked about, or Courtney mentioned, the 3-legged stool. You're going to live too long, die too soon, or become disabled. So life, annuities, and disability are paramount in financial planning. In the business products, in the business marketplace, income protection is certainly important, but the business overhead expense and buy, sell, and key person are great products to keep the business viable, so that if you do have to sell it, it's not a fire sale, but you're able to let the products insure your business rather than you having to take all your income out of your pocket and away from your family to cover the business and keep the doors open. So the business products, they're not really sold relative to income protection. I think an industry statistic may be like 5%. So why they're not sold, I'm not sure. If an agent is selling life insurance and doing a life buy sell, again, talk about the disability buy sell. Business overhead will keep the doors open to pay all the fixed expenses other than the owner's income, but it also covers the property casualty premium and the health insurance and employee salary. So it really can do the job while the business owner recovers to come back to a business that the doors are still open. Key person is also another one that keeps an income coming into the business. And then of course, as Courtney alluded to earlier, you can carve out your key employees and do a management program with individual coverage, or if there's underlying group, we can supplement on top of that to get the management executives, VPs covered to a level where the rank and file is covered. Because the highly compensated executives have caps on Social Security, on life insurance, on the percentage of payroll is always skewed more to the rank and file than it is for the executives. So this is a product that we don't have discrimination testing. You can legally carve out a group of execs by tenure, job description, income, and do something for those highly compensated individuals in the income protection arena. And again, in the small business, all the buy, sell, and the business overhead are so important to keep the doors open. And I'll leave time for others to expand on that.
Courtney, your perspective?
Obviously, we could do a whole session just focused on this topic, because so it's difficult to paraphrase and just do a short statement. So to nobody's surprise, small, mid-sized business offers a huge DI opportunity, not only from that perspective of supplementing group LTD, but really protecting the business owners and their business interests, like Marcy, did a great job of alluding to. That example of the buy-sell agreements, those are so often addressed, but using term life insurance to protect against the death of a business owner. But rarely does that conversation evolve into, well, what if I don't die? What if the partner becomes disabled, and doesn't die? What does that risk look like? The concepts of key person protection or employees, loan indemnification, and again, I just want to kind of hammer this home, that business overhead expense. In my closing, if you are working with business owners or have any interest in doing so, or if you work with property and casualty firms that do commercial lines insurance, I beg you to take the time to learn about disability business overhead expense, because the insurance reimburses a business owner for those non-revenue generating expenses like rent, mortgage, the insurance premiums, and so forth. But it's also tax deductible insurance. You don't have to do anything to it to make it tax deductible. So those premiums feel different. And it's really, for the property and casualty advisor, the person that, does those commercial lines insurance, they're basically already selling everything else but this. And many times they don't understand that it almost works like a waiver of premium for their products in the P&C world. So I think, if you want to dabble in it, that is the one that I would recommend specifically for those small and mid-sized businesses.
Thank you, Courtney. Eric?
Yeah, and I don't know that I've got a ton to add. I would just say that it seems like the traditional disability approach was to go after physicians in the dental market. It's no surprise that the small and mid-sized market is a huge gold mine for disability opportunity. Just a couple of things maybe that I'll add that I've learned and we've seen in our experiences. If you're going to target the small and mid-sized business market and you're going through the employee benefit advisor, you have to find the advisors who have relationships with the C-suite executives. Oftentimes your benefit folks have relationships with HR, which is it's a great place to be, but typically HR's role is to shop the benefits and to try to save money. And so this is not going to save money, right? You're spending extra premium, but it's worth the investment for a business owner. So you just have to target the right producer. I think the second thing that I would point out to the benefit producers who are always conscious of and trying to protect against broker record letters being taken on their group benefits. One of the great things about all the disability businesses is your renewals are vested. So you've always got an anchor into the group and a reason to call them back and to provide service, even if you lose the core benefit business. And so just lastly, I think an easy place to get started, in Principal, you guys, Steve, you guys do a great job of this at Principal, is doing the buy-sell reviews. I think Marcy or Courtney one alluded to, oftentimes folks will fund the buy-sell through term insurance, but oftentimes the buy-sell document includes language that there's a requirement to provide funding after a certain length of disability, and yet it's almost never brought up. And so, again, if our role is to point out the need, that's a great place to get started. And Steve, y'all do a great job of that. So hope that answer was helpful.
That's great. Thank you for the plug, and I'll magnify that just a little bit. Just our advanced solutions teams do really great work in this arena. So reach out to any of these fine participants today as well. They are expert at what they do. They can help you establish the need. They can help you deliver the solutions. And we appreciate all three of you being involved in today's panel. We appreciate what you do on behalf of the industry. I want to say thank you once again to NAILBA for allowing us this opportunity. Anybody that has questions or want to have a conversation about IDI today, feel free to go to the Principal booth. Folks our experts are standing by and ready to engage in dialogue. Appreciate the opportunity today. Thank you once again, and have a great rest of your day. We'll talk again soon.